So we're going to go into our fourth panel discussion in our 2-day program. This is a very important one, and I would like to take a moment to segue again. We have an organizing committee here that's made up predominantly of ladies, and I think I can speak for the ladies and say that this is something that means a lot to them, as I think it would mean a lot to you as well. Panel discussion 4 is about every woman being her own CFO. It's a very interesting one, and I'm first going to introduce your moderator for this. Ladies and gentlemen, could we please say a very nice virtual hello to consultant Boston Consulting Group? We have Aashna Shaparia. Aashna, hi.
Hi, Kyle, and hi, everyone. It's such a pleasure to be here. Thank you so much for inviting me to moderate this panel today.
Absolute pleasure. We are going to have a few others joining you as well, Aashna. Just hang tight. Let's introduce your panelists for today. Our first panelist, ladies and gentlemen, you might know her as the founder of SG Budget Bay. Please welcome Dawn Cher. Hello, Dawn.
Hi everyone, my name is Dawn. As Carl mentioned, you guys might know me as the SG Budget Babe. So yeah, I think this topic is super important. I'm all about empowering women to understand their finances better and improve their lives. So let's go into this right away.
Fantastic. Dawn, before we jump right into it, we've got two more of your colleagues to introduce to everybody. Right now, we're going to say hello to the President, Financial Women's Association Singapore. Please welcome Jacqueline Chia. Hi, Jacqueline. Jacqueline, we're having a bit of issues with your audio. Could you see if you could get yourself connected? If not, you can wave at us. We'll buy time while you wave at us.
I'm taking off the Bluetooth.
Now we hear you loud and clear, and you sound beautiful. And now we don't hear you anymore.
Can you hear me now?
Now we do. There we go.
All right.
Jacqueline, do you want to very quickly say hello?
Hi, everyone. I'm really excited to be on this panel. Looking forward to share some findings and talk about financial literacy in Singapore for women.
Beautiful. Fantastic. Thank you so much, Jacqueline. We also have another panelist now. Don't confuse her with the lady that you saw before. That's her twin sister. No, it's not. Ladies and gentlemen, we're bringing her back up again. Please welcome CEO, Research for Impact Private Limited, Dr. Joanne Yoong. Joanne.
Back again. And my twin sister also.
Aha, 2 in 1. It's like a buy one, get one free option, right?
Absolutely. Very good financial literacy.
For sure. Aashna, I'm going to hand it over to you. I'm going to take a short recess, and you guys, it's time to get glued to your screens. Here we go. All yours.
Thank you, Carl. So I think I'd love to start this panel discussion with a very pertinent question to our audience here today. So this panel discussion is titled, every woman should be her own CFO, but we want to hear from you. Do you think that females need to be their own CFOs? And let me break this down a little bit. What we want to really ask you is, do you really think that women need to take charge of their own finances? I think we have a QR code here. You can scan this and share your thoughts with us, and then we'll be playing this back through the course of the panel discussion. So I'll give you a few minutes to do this. Okay. After you answer this question, we have another fairly open-ended question where we want to solicit your thoughts again. So what do you think are some of the factors that contribute to the gender gap in financial literacy today? So the interesting thing is, we have all our audience here today come from different age groups. We'd love to hear, your thoughts before we launch into this panel discussion and hear from, our experienced industry professionals here. Okay, I think we have this question up. And then finally, the last question for all of you is, could you please rank the following tools and resources based on your perceived effectiveness of improving financial literacy? And here we have social media, books, podcasts, blogs, and professional help. So the top being the most effective and the last one being the least effective. Okay, I'm going to give you another minute here. Okay, Hagen, have we managed to capture the responses? Okay, great. I just got my go ahead. Oh, no, sorry. Just a few more responses. Okay, sure. Okay, let's move on then. Before we get started, would love to hear, the answer to the first question to really contextualize this discussion on our panel today. So what do you audience think in terms of whether every woman should be her own CFO? Could we please share the responses? I think just waiting for the OC to screen the responses. Okay, so we have 90% saying yes and 10% saying no. That is an interesting response. I think we actually have Jacqueline, who's going to be sharing with us some of her findings from her FWA research. And this is a great thought starter, Jacqueline. Would love to hear your thoughts to this response and then jump into your research at FWA.
Sure, thanks. Let me get on to sharing first. Just a bit of background. Financial Women's Association of Singapore is a local networking association for women in finance, such as bankers and investment bankers and private bankers. So what we do here for the last 20 years is to help women in finance work on personal development. Recently this year, what we have done is that we've looked at the financial literacy rate among women in finance. So these are your investment bankers, your CFAs, people like myself, who is a banker for over 20 years, and to assess whether or not there is a gap. Definitely the feeling was very strong. And for me and my team, we were looking at trying to find a more substantive response through a survey. So what we have found is that in the women that shared with us, 64% of the respondents shared that financial literacy should be incorporated into school curriculum or extracurricular activities. Now, why so? Because by the time we are adults, and it will be a bit late, we are too busy. We may not even have the bandwidth to even understand because we're probably been a bit intimidated by the terminologies, or we feel that we're still able to do it later. But if this could be done at a more proactive approach at the young age, at national primary school or secondary school, learning the terminologies, perhaps this barrier to understanding financial terms at later age would be much easier, less intimidating. So moving on to the next stage, 80% of the respondents noted that family as a key influence in managing salary of the new professionals venturing into the workforce. What this really means is that family is the basis in Singapore that teaches us the value of money. So all of us growing up in Singapore knows that we have to save money, we have to be careful, do not lend, do not borrow, to make sure that we put aside and make sure we apply for a flat or buying. But the reality is that we're far beyond this. Most of us already at the first 2 years in the finance industry could well afford to actually apply for a flat or even buy an apartment. So these influences that we have from family could be a bit skewed or a little bit too basic for us, even though we could be a banker or a person of moving up in a very high profile career. And what was interesting was that at the later stage, a lot of women in Singapore, especially the women in finance, are really scared that they can't save up for retirement. They felt that they lacked financial education and experience. They rather leave it to their partners and parents. They rather focus on childcare responsibilities because they want to be a good mommy. There is a very big gap. And this is actually an imposter syndrome happening in most of us in finance, especially even for myself when I was younger. Reason being is that we earn a lot of money, and the behavior in Singapore is that I spoke to many of my anonymous friends that financial autonomy is one of the most important criteria to financial confidence. Financial autonomy equals to having a savings account that you can have, a credit card that you can spend, and that you can buy whatever you want, you can do whatever you want, you can go for a holiday. So, but it doesn't equate to investment experience. So that's the big gap between savings and investing. Now, why would a person with such good confidence in running a career or being very articulate in numbers not be able to do investments? Well, the reality is that we don't have time. Number two is that we are not allowed to invest. As an individual like myself, as a banker, I've always had to get approvals. So I've always decided to leave it aside, buy property, illiquid investments, and not get the approvals for investing. So I defer that decision to invest. So lastly, the reality is very true in Singapore, both men and women, but women feel that they are not confident about retiring. And most of the women would like to actually do something different. Having adequate finances or saving up for retirement is not about getting old. It's about financial freedom, about a decision to switch your career, a freedom of choice to do something different. You can't be dreaming about being an entrepreneur or going into a gig economy if you're worrying about paying for the bills for the kids, or saving up money for the elderly who are in need of medical needs. And the reality is very stark here. It's getting more and more worrying, because during COVID time, a lot of women actually have lost their jobs through retrenchment, and they get very anxious. There's a lot of anxiety attacks, a lot of stress issues. Marriages break down. They're forced to hold on to jobs, and it's very concerning, because they do not understand that they actually have some money around, but they do not know how long it lasts. So this is our findings, and we have submitted this to Ministry of Social and Family Development in April as part of the Women's Development research, and hopefully the government will do something about this and hopefully help women, especially the young ones, to start arming them with some knowledge of financial terms before they get to a bit bigger, older age. Thanks.
Aashna, I think you're muted.
Apologies. Thanks for sharing, Jacqueline. I think those research findings really put things into perspective for our panel discussion. I'd love to start by a really open-ended question, but I think an important one, which is, what are some of the issues that you think that they contribute to the gender gap in financial literacy in Singapore? And interestingly, Singapore is, at the end of the day, an advanced and developed country. So why do these issues still persist today? Would love to hear from you, maybe Jacqueline, if you could share your thoughts on this first, since you're very much in the space and you've spoken to several people over the years about this. What do you think some of these factors really are that is driving this gap?
I think we have all the statistics that we have seen, especially during this symposium. It's amazing. But the reality is the behavior. We need to understand that in Singapore, specific in Singapore, we are a country that has developed really exponentially fast. We're 56 years old. So if I take all of us back to our grandparents or parents living in the 80s, Singapore was a different world. Interest rates were super high. CPF was not exactly popular because the government, even in the 70s, the government wasn't very stable. So putting your money in the CPF with the government was a question mark, which I remember my parents saying that, don't trust the government in the 70s. I'm a 70s baby. So what they did was that they worked very hard, pay off their loans, always put food on the table, saved up, and their dream was to pay up the HDB flat so that they own it. So this was a very strong value, and we are all very filial children in Singapore, and we grew up with not much. Everyone had not much. So everyone was just focusing on surviving. But fast forward, when I graduated, I got a job in City. And next thing you know, in 2 years' time, I was able to apply for an apartment. Not only that, I was thinking about which gym to go to, and what parties to attend, and clothes to wear, and all my clothes were going dry cleaning. I didn't need to worry about food on the table. I didn't need to worry what my parents did. And but I kept the learnings from them. I kept the learnings with them, but I didn't learn how to manage it for the future. So that gap actually is quite consistent among all my peers. And it's true, because then fast forward when you're 40 years old and you realize, okay, you got to do something about it, because you're getting tired with your career and you want to actually you want to leave, you want to do something different, but then you didn't know how to deal with debt. You didn't know how to deal with a lot. How does this CPF work? How does this mortgage loan work? So there's a lot of question marks. So it's really specific to how it is in Singapore. I think it's very behavioral rather than other than that. We're really all smart people.
Thanks, Jacqueline. We'd love to hear from you also, Dr. Joanne. What do you really think is the real impact on our society, our economy in Singapore, arising from this gender gap? If you were to fix it, how would things change for us here?
Well, I think at the end of the day, and I actually want to turn that back to Dawn as well, because I think having some lived experience in this area is actually really important compared to the academic piece of it. I think one of the things that we see with the gender gap, especially in the older ages, is that we're seeing a lot of financial vulnerability in older women. And this is very challenging because women live longer. They are, typically speaking, in terms of health, not in as good health as men for older ages. And so at the end of the day, what we're seeing is a lot of vulnerability in the older age groups. The other thing that's very challenging for us is that I think that even in the middle and the prime age groups is that if we don't have financial confidence, we can't go forward and be the kind of entrepreneurs, the kind of risk takers that we want to be. So that's also very challenging, right? So, and that means that we have women who at the end of the day are very risk averse about setting off into new paths. If we are an economy that wants to be a cutting edge economy, right? And we have women who are afraid to take those risks because they're not financially prepared, then that's a real challenge for us. And it means also that we're going to see this gender gap multiplying in all of these other areas. And then last but not least, I think what's so fascinating about what Jacqueline shares is that, at the very highest end, we're seeing women in the financial sector themselves. And that's if we are seeing these gaps at that end of the socioeconomic spectrum, if you imagine what this looks like at the lower end of the socioeconomic spectrum, what we're seeing then are lots of situations where women are actually at a greater disadvantage. Many of them are at physical risk, social risk in their families, and financial risk actually compounds all of these problems. So I think, we're looking at impacts for the social security of our economy, the innovation and knowledge creation, and really at some level also the basic social and family structures. If we are able to fix the gender gap, all of these things rise together.
Thanks, Dr. Joanne. Would love to hear from you as well, Dawn. You're so much like Dr. Joanne said, on the ground. You've been running your blog for 7 years now. And, you really know the pulse of the women in Singapore. Would love to hear your thoughts on this.
One of the factors I hear a lot from my readers is that they're just afraid to get started because they feel like they don't know much. And they have this misconception that it's too difficult for them to start on. And then when we dive deeper, right, and you start asking them like, why so, who is taking care of the finances then? And what we typically find is that women tend to be in charge of like the day-to-day expenses for the household, for the kids, but then they just leave the future planning to their spouses. And then that raises a question mark, right? Because if you can manage the household finances, that's already a basic skill. And it shows that you're more than capable of applying that and projecting it into your future expenses. It's just a slight switch of what you do. It warrants not looking at short-term savings. How much can I save if I go for this option versus this other school, right? Or this toy versus that other book. But it's more of like, how can I, a holistic point of view, actually push my finances to work for me in the future. But women get so caught up in all the day-to-day And that lack of confidence is really what, keeps them from trying. So I get a lot of readers who tell me they've yet to get started. And I would say like, what I see on social media is that the scene is really evolving. I think it's great with having a lot more content creators who are going into finance. So we have, it's not just me, right? When I first started, I think I was pretty much the only female person in the blogging scene who was writing about finances. But fast forward to today, and we are now seeing even folks like the woke salaryman creating content. They just quit their jobs to really focus on content creation around this. And this has really increased the awareness. But then the question is, so when are you going to move from having the awareness that you need to do something to actually taking action?
That's a great segue to our next question, which is basically, so what can women do to improve their confidence and their financial literacy and prepare to basically take charge of investing for the future? Would love to hear from you, Dawn. I think it sounds like, you've had a lot of these conversations and perhaps can also point us to some very specific tools, perhaps, that women can use to do this.
Yeah, I think the first step is always understanding, right? And once you've decided that you want to take action, putting aside your lack of confidence really helps. So like the more you tell yourself that it's complicated and the more you think that, oh, my spouse is just going to take care of it, I don't have to worry, I can always get to it like 10, 20 years down the road when kids are older, then, well, you'll never really get started, right? So push that all aside and really just start. And I always tell my readers, it doesn't matter how much time or capital or skill level you're at, because there's always an investment for every different level. I did this whole workshop where I was teaching my readers that there's like, you can think of it as a laddered approach, right? If, for example, you may see on social media, YouTube, everyone's talking about, oh, the next 10x stock or the next 100x crypto, right? Okay, fine. And if you think that you don't have that level of analysis, you don't really understand what they're talking about when you watch those videos, it's okay, because there are even stuff that's more basic, like there exists unit trust, exchange traded funds, and you could even use an investment linked fund from an insurer to achieve the objective. But when people fixate too much, and this is where I think the scene also needs to improve, they just keep thinking that there's only one way. But the thing about finance is that it's so personal. There's more than 1,000 ways to get to your end goal. So in terms of resources now, the free content creation, YouTube, blogs, websites, and all of these places are great avenues to begin with. But I think above and beyond, women also need their own support, overcome their own lack of confidence. Yeah, I mean, that's from the younger crowd that I see. What about, I would love to hear from Joanne and Jacqueline as well, because it must be completely different dealing with women who are a bit older, who might have had those misconceptions in their mind for a lot longer time, right?
It is really challenging, and I'm not that old. I'm somewhat old. I'm in the young old category. I should have done a little bit more makeup today. No, actually, but I wanted to echo actually, Dawn, exactly what you said. This is exactly actually what we hear from women in our old age group. So when we've done focus groups with women in the 60 plus thing, what they say is that, first of all, a program like the one that we put them through, or these community-based discussion groups, having a group where they can ask questions freely is so important, because part of it is that in their current peer groups, they are very shy to talk about money, or rather there's a lot of perception that talking about money is very embarrassing, or asking questions or revealing financial failures is washing your dirty laundry in public. And so a lot of these discussions aren't really held. Or even within families, one of the things that we have talked about with older women is that it's difficult to bring up things like estate planning, or if you don't have that relationship with your spouse and your kids, taking those conversations forward is really hard. So I think all of these sort of new spaces where, especially when you're young, having a more open dialogue, creating a safe space psychologically to ask those questions is really important. And I would also say, absolutely, I think one of the problems that we have, again, not saying anything about Singapore and the education system, is that we want to look for problem solving and we want to be 100% correct. We're very focused on the A. So when we're in a situation where actually personal finance isn't like that, right? You actually can get out there and do well. You shouldn't have that fear of starting unless you're going to be a star student. It's like saying, I can't be a Formula One driver. I don't want to learn to drive. That's, driving is risky. Driving is challenging. Yes, people get in horrible accidents, but not having that as a skill, right, is not actually that useful. And you might have all of these other ways to get around. That's fine, but having some idea of having those independent skills and learning that skill set and the rules of the game in order to manage that risk is really important. And just because, again, you're not going to be the world's F1 Formula One driver, that doesn't mean that those skills are not important for you and they can't get you somewhere, especially in in all of the stress that you're going to have. So I think all of those tools that you talked about actually for older women are also still really important.
Thanks, Dr. Joanne. That was a fabulous analogy. I never thought about it like that before. Would love to hear from you as well, Jacqueline. I mean, if you have stories to share about your mentees or about people you've met, and particularly how they've grown their own confidence to invest for the future, I think all of us would derive a lot of learning from that. Jacqueline, I think you're on mute.
Sorry, okay. So I'm a banker all my life, so I get to advise a lot of clients. First thing I would say that please do not rely on a banker or a financial planner or an insurance agent to learn your financial literacy. Because at the end of the day, and I will speak very freely, that we do have targets, we will have commissions paid, we will push certain products because it is part of our job. What you need to do is to have an informed decision to arrive to that. And to arrive to that needs you to actually be comfortable with the terminologies, the words or interests in areas where you think you want to invest. It's okay not to be perfect because like everything we've been taught in school, we have to be perfect, but it's not possible. Financial literacy, as I learned over the years, is the application of the knowledge throughout your lifetime. So the knowledge you acquire is incremental. What you have planned when you're 20s will not apply when you're in 50s. What you plan for your retirement is one pot of money. It is not going to be ironclad and then you can't enjoy your life. You can't go and buy a nice bag for yourself. That's not the way to do it. It's about being able to have an understanding where your monies are put aside, and this is a pot of money that you want to keep aside, another pot of money that you want to spend on yourself. What's wrong with that? You work very hard. You should actually treat yourself to a nice bag or a nice holiday. There's nothing, no guilt factor, you know. But the problem for women in my age group, especially the 40s to 50s, we feel very judged. We feel very judged because we are expected to work very hard to especially in the finance industry, to know everything. And if we don't know everything, we don't know FX, or we don't know how to invest in crypto, it's very embarrassing. But the reality is that our day job doesn't require us to do that kind of investing. Our day job is to do whatever we have to do. So our personal life and our knowledge is actually completely segregated. So I've been trial testing a few test bunnies, I call them, friends of mine and ladies who are very senior in financial institutions and government institution in my age group. And anecdotally, I gave this person, I forgot. In the age group of 50 to 55 is the easiest to talk to them because they are really in dire straits of like, oh, I'm going to retire 55. What am I going to do? You know, so the conversations become very open. But this is my advice is only as a friend. And I say, fill up this Excel spreadsheet of your expenses. So at least you know what kind of expenses you have and how you're going to wind it down and, you know where is your passive income. It's 3 months. This lady is very senior. She's in the audit side of government agency. She hasn't even filled out the second cell into the Excel spreadsheet because she couldn't face it. It's just too difficult. Then going down to an age group of early 20s, fresh graduate, master's grad. She is doing very well. Very, very intelligent, one of my mentees, and she wanted to do investing. And first thing she said, how do I buy stocks? And I'm like, okay, if you do not know anything about stocks, do not buy. You may be really smart in PPE and you've delivered masters and you're in a very, very good job, but you know nuts about finance. So let's start from scratch. You have to start reading. And she stared at me. I looked at her, you're not stupid, right? So you can read, right? And she's like, okay, so you are stupid and you can't read. So she's like, so what do I read? I like, Mr. Google has everything, just key in bonds, read bonds. So that's this, you see, so what I'm trying to say is that we take on very segregated personas, work life and personal life. And in the personal life, the whole aspiration, so the aspiration of the young, from what I see a few of my mentees, is that they want to get an apartment. And one of them, I asked the question, is like, why do you need to buy an apartment? Because all my friends have an apartment. They're talking about it. I said, are you going to live in the apartment? No, I'm going to rent it out. Okay, you're going to stay with your parents, but you're going to rent out the apartment. So you're going to have a huge loan at the age of, let's say, 28. And you're not sure whether the property market will go up or go down. You have no view about it. So you want to be in debt for the rest of your life. You're very happy to be in debt. Do you understand what is debt? No. And she has a CFA, by the way. She doesn't have, she absolutely do not understand the concept of debt. So this is very trying for me to see this. So unfortunately, I think it's no fault of anyone, even myself and all of us in Singapore. We were just academically strong, very good with mathematics and stats, but just application of the knowledge of even the concept of compounding interest, which was baffling for me, because they could talk about compounding interest from a CFA perspective, but not understand it in the CPF perspective, how the concept of compounding can actually work for them if they continue to put their money in and not take it out for housing loans. And it took even regional managing director, I'm talking about managing director in finance, 2 CIOs in 2 global banks to say, oh, I see. Okay. So if I pay back everything, all my loans, CPF outstanding, housing loan, the money will just compound. Yeah. So and one of them didn't believe me, and she actually booked an appointment with the CPF officer to just double check. After that, she called me up. Hey, you're right. Okay. So they paid up their loans, put their money back in CPF, because I said it beats structured product. You're 51, you put back everything into the CPF. In 4 years' time, it compounds, you can take it out. It's the best investment ever. Beats structured products, beats anything. Capital protected, so-called, 2% compounding, 2.5% compounding. What more can you ask? No key man risk, no issuer risk. Yeah, okay. So there was this enlightenment suddenly. But I mean, they were far smarter than me. But you're talking about the Singapore mentality.
Yeah. Thanks, Jacqueline. Would love to hear now from the audience. So we had our question on what are some of the factors that have been causing this gap. Would love if we could share the responses from the audience to this question. Wow, so we have society standard financial tools too complex, very much in line with what our panelists have said. Education level is one new one that we haven't necessarily spoken about. Risk-taking, misogyny, women earn less than men in general, gender biasness and prejudice, and dependence, lack of sharing from mothers. Yeah, bias is one that keeps coming up. Culture, perhaps, right? This is what Jacqueline mentioned earlier. Opportunity and lower expectation from parents or peers. Yeah, I think this is a very honest response, I think, from our audience about what they believe are some of the factors that are causing this gender gap in financial literacy, and almost echoes a lot of the points that our panelists made earlier as well. Okay. Thank you for sharing that. I think, we have a few more minutes to go because I think we're running a bit late on the panel. So I'll just speed up to our next question, one that's come up from the audience. I think Priscilla asked this question, which is, what are your views on male allyship, and how can we encourage males to support their partners in making active financial decisions together? A very interesting question, a very pertinent one. Would love to hear from you, Dawn. What role do you think that males have to play in bridging this financial gap that we see today?
Or the hardest and the harsh one and the best way to get women to do it would be for the males to not do it for the women, right? But okay, that doesn't really work out also, because usually in a relationship, in a household, you do need people to take on different hats. But I think like what the males can do is making sure that even if you take on one role while your wife or your girlfriend or whoever takes on the other, keeping each other updated and having regular conversations about them help. So my husband and I had this epiphany recently as well, because, we were looking at the COVID cases rising, and obviously we got a little bit scared as well, right? And then my husband was like, no, if anything has to happen to any one of us, it should be me and not you, because I wouldn't know how to liquidate your investment portfolio, how to manage it. You're the one who does everything in this house when it comes to money. And I was like, yeah, so that's why you should learn, right? You want to come from my workshop, you want to come and, learn and just sit down. But I think, the other thing is that he knows there is this gap, but what I try to do and what he actively also participates in is that we have a lot of regular conversations about these. So when we go on car rides to pick up my son or to bring him to and fro for classes, we'll have conversations about why I bought this investment. And then I'll get his thoughts on it as well before I decide, although usually his opinion comes from maybe just 20% of my decision, but I still involve him somewhat. So he has at least, I would say, some awareness and some very, very basic stuff. And I just kept ingraining into him that he needs to really learn, right? I can't be the one managing all of insurance is easy. I can manage that for the household, but I can't manage your investments for you forever, because at some point, if anything will happen to me, you really need to know how to continue it, right? Because inheriting the portfolio alone is not going to help you or our kids. So the great thing is that he's getting started. Now, we're the opposite, right? So I'm kind of like the male here in this relationship when it comes to finances. So if we want to invert that, I think what the women and the men can do is that for the women, when your husband or your boyfriend or whoever gets involved in investing, take a more active role in asking. Like, if they're managing the investment portfolio for you, ask them, oh, why did you allocate this amount to bonds and this much in stocks? Why are you so confident about Tesla? Is it just because you watched that one YouTube video? And then questioning the decisions. I think that helps. And women should also definitely, go for causes. I mean, it would be great if the men can sponsor them for causes to give them a push in the right direction. But even sometimes just following certain influencers or content creators or websites on a regular basis, or reading articles. People like to share articles, right? And then you read them and then you reshare them again. Sharing those kind of concepts to your other half once in a while can really help. It's like a 3-second thing. Hey, I just found this interesting IG story, and then you send it to your spouse, and you're already kind of awakening their awareness just like that. Yeah, so it's going to be lots of small steps along the way, but definitely doable.
Thanks, Dawn. Some great tactical suggestions here for our audience to take away. I would love to hear the audience's thoughts on our question 3, right? Which was, what do you believe is perceived effectiveness of the tools and resources that are available today? And then maybe we can get the panelists' thoughts as well on how to use those tools and resources. Social media. Oh my God, Dawn, you're at the top of the list. And then we have followed by professional help, podcasts, blogs, and finally books. What are your thoughts, Jacqueline, on these, this response from the audience? And how do you think, like Dawn shared, maybe tactically speaking, we could use some of these resources to kind of upskill ourselves when it comes to personal finance?
I think social media is the best approach to helping women, even at the older age group. So I often forward work salary man and all the social media like Budget Babe all to friends to start off, because it is not intimidating. They don't feel judged. So importantly, the whole issue here I'm talking about, it's about the judgment that they feel inside, that they feel that they're not good enough, or they're unable to understand, they don't know, they don't dare to ask. So the social media makes it more palatable. So I think this should continue, but we do need more response. I mean, right now it's great, but I also worry about the responsibility of the content, the nature of the content. It has to be done carefully, and it has to be done responsibly. So that got me thinking that why don't we start with the kids in primary school, teach them what is the concept of saving, teach them the word, along the way, deposit, credit, what these little words, because lo and behold, today we are already talking about cryptocurrency. We're so backward, and we mothers, I'm a mother, I have to rush to learn about crypto, because by the time my kids are out there working, I mean, they know crypto a little bit more than me. I mean, just imagine if you have young kids and crypto is already here, you're so behind. So I think I totally support social media in a responsible way.
Yeah.
Thanks, Jacqueline. I think one interesting question again from the audience, which is to take this one step further, right? The question here is, are there any ways companies can boost the confidence of their female staff to increase their level of financial literacy? Joanne, would love to hear your thoughts on this one.
Sure. I think, in fact, I think the workplace is a great place because we want to think about companies offering not just, wellness benefits and health benefits, which companies have done for ages and ages as sort of like a gym membership for you. And we really want to think about companies sort of branching out to support people in terms of their financial wellness as well, right? And some of the things that companies can do, for example, is that they can actually be a first step of curation for products, number one, right? So companies offering retirement seminars have been there for yonks. But now we know that actually offering more financial counseling and support as an employee benefit much earlier on is really useful. And also making sure that, right, if you have a curated set of financial products for your employees, that's also a very great place to get information. Many of us maybe don't have the advantage of learning from our parents anymore, or we don't know how to navigate that space. But as an employer that's responsible, if you have a benefits department or you can hook up with a provider who's going to help do that, then in actual fact, most people say behind their parents, the other places that they do learn most about finance are workplace and workplace colleagues, as well as friends and family. So I think workplace is a wonderful place to start. I did also want to add a little bit on to our comments about social media. And I think that social media is both our greatest tool and the greatest threat these days, right? A lot of what we're seeing now is that, we see that it's where we get a lot of information disseminated very powerfully, but we also see a lot of misinformation disseminated very powerfully. And a lot of the conversation that we're having around the world, actually, not just here in Singapore, is how do we take a blogger or a personal finance influencer and connect them to a regulator without doing two things. One, making it so challenging for the influencer to be authentic and relatable and agile. So how do we take the best of making sure that they're responsible and accountable and hooked up to the most reasonable sort of academic and industry research without taking away the element of what actually makes them effective? And I think that's one area that someone like Dawn navigates really, really well in being responsible and accountable while still sort of sharing in a very meaningful and authentic way. And the other thing I think which is so powerful about social media is that we never learn stories about failure and lived experience in any of the official, we have a lot of how-to manuals, but we don't have a lot of stories about how not to. And I think actually for most of us, having that out there to help us conquer that fear is so important. So I also feel that social media is the right space, but I think that we're still really thinking about how to do that right without losing the good and not over-regulating out the bad.
Yeah, and I might just add on as well. I mean, it concerns me sometimes whenever I see people following, some YouTubers or TikToks who talk about, they basically just shoe, and that's a new age concept for like promote, right? They buy into this stock, for example, and then they say, this penny stock is going to be 10 times, or this coin is going to go 100 times. And it's so easy for people to be misled. I mean, even on my platform, right? Just this morning, I was like scolding or nagging a friend because she saw that I'm very sensitive to not share what I buy on a social media platform publicly, because I know I've seen over the years that people are just going, oh, well, Budget Babe bought it, so it must be safe, right? And I go in, and whenever I see such cases, I always like, nag at them. I'm like, guys, I'm not gonna be here updating you every single moment when I buy and sell. And I'm under no obligation to. And the worst thing is, I can tell you what I'm buying, but if you don't know why I'm buying, you don't have that conviction, I can guarantee you that when it crashes, you're going to be the one who buy high, sell low. And I'm going to be the one who buy low and sell high, because you don't understand the concept. And that's why you need to do your own homework. You need to equip yourself with the skills. And only then you should use social media as a reference guide, right? But you shouldn't take it as a holy grail or a Bible, because the truth is, as what Joanne mentioned, a lot of the content creators out there may be new, or some may not be as, how should I put it in a nice way? They may not be as aware. I've seen over the years, like in 2017 and 18, when crypto first became super mainstream, right? I was monitoring this YouTuber. His name was Crypto Nick, and he basically was participating in this like Ponzi, or to put it out front, a scam. Okay, where basically he was shilling this coin, and a lot of people got into it, and then just the term now is rug pull, which means they pull the rug under you and you kind of like just lose everything, right? And it was very sad because people couldn't see that conflict of interest, because they don't openly disclose why they're promoting this to you. So I think one of the good things that our government and our regulator has done is that they insist that if you're writing any sponsored posts, you have to declare it. And that helps as well from a financial perspective, because when companies engage folks like me to talk about their insurance product or their latest investment plan, when we get to say that this is sponsored, and we openly disclose it, because our clients are also reminding us, it's not just up to us anymore, okay? That helps the reader to decide. But even then, putting that into context for our readers, that's where the value is. But at the end of the day, the readers need to make their own final decision. So I would say it's great that social media is coming up, but even as a social media person myself, please don't rely 100% on us. You should never, because you just don't know.
Yeah. Exactly to your point. That's why I got thinking, I said, how do we then help? Social media will continue to grow. So the children or the teenagers or the young people, they need to be able to understand the terms already by the time they really get active, so that they can make an informed decision. And also people who are investing for them or marketing these products also need to be financially strong in terms of their understanding of how to manage finances. They are often taught how to position a product or market a product, but do they really know how to use the product for the right reasons for different life phases? That's a very big question mark. I do say that not many, a lot of them do very well, but the reality is that do they know how to use it, to apply it, is a very big question. And I wanted to just point out something about the whole panel is about she can be her own CFO. My question, originally I thought about it, does every woman in Singapore want to be a CFO? Because a lot of them don't have the confidence. So how can they be a CFO? And how do they come to the table? It's all about the confidence. And I'll share you something very, very personal to me. A long time ago, I'm a typical woman who just basically deferred all the financial literacy until I was 40. And I did manage to sort things out, but I did miss out something. So my daughter's insurance policy, I did not, I used to push everything to my husband when we got married 24 years ago, and he handled everything. And one of the policy that he handled for me, or rather the insurance policies he handled for me, I thought that, he had sorted it out and changed the address. But one policy was missed out. And it was only last year that I realized that this particular policy was not paid because the address was not changed. And the policy was lapsed. And sadly, this policy would have, we bought matching policy. So his was fine and mine was lapsed for my daughter. And it's very unfortunate because it was a waste. I did have a health issue. I had early stage cancer. So I always buy riders, and that rider would have kicked in to pay for this policy. But unfortunately, the policy lapsed. So there's no point even, even considering. It will just have fall into a demise in the next 3 years. And I had to tell my daughter, say, I'm sorry, she's like 20 over years old. I'm sorry, this policy is not enforced because mommy forgot to change the address. And she looked at me like, you know everything in finance, how come you can forget? I said, because last time daddy used to take care of everything and I forgot about this policy. So that is reality. That is really what we women in finance actually do. We're too busy. So, but never too late to learn.
Thank you for sharing that really personal story, Jacqueline, and you as well, Dawn, sharing your personal stories about how you manage this with your husband is really inspiring for the audience today, including myself here. So lots of learnings. I think we have just a couple of minutes to close up. So I was hoping that we could get some tips or quick advice from all three of you that our audience could take away and go back home in action. I think we're getting a lot of comments in the chat with the audience being really happy about how relatable the sharing has been today here. So in that similar vein, would love to hear some tactical advice from all three of you for our audience. And our audience spans across different ages. We have students, we have fresh grads, and we also have young professionals. So what would you have to say to them? Would love to start with you, Dawn.
Well, I think my biggest tip would be to take action, right? So how about you guys right now or right after this session, write down 3 things that you want to do to really help yourself improve in your financial literacy. You can just use what the poll and the discussions covered earlier on, like for example, social media. I maybe shortlist a couple of people and content creators and websites that you want to be regularly following. You can look at books. So what are some books that you might want to pick up to learn about personal finance? I have a whole list of like recommended books on my blog as well. So if you guys just Google SG Budget Babe recommended books, you'll find that post. Or even things like subscribing to a podcast, or like what Jacqueline provided as a really good reminder, review your insurance policy. You don't have to wait for your insurance advisor to call you, and then that's the only time when you look at it, right? But you can review it right now and check what are some gaps. What can you do to take action in the next, like today and tomorrow, not even in the next 1 year, right? But today and tomorrow, what can you start doing that would then create those little small steps and habits to make you more financially safe?
Thanks, Dawn. What about you, Jacqueline? What would you have to say for our young audience?
Honestly, open the CPF portal, start learning about everything in the CPF portal, right down to the disability insurance and all that. You'll be surprised why I would say that, because the younger you are, the cheaper it is to actually insure yourself. And I think that's the first step. Just learn the portal, because that is a very important portal. While it is what we call our savings, it is actually your backup plan, your master backup plan. Learn why I say compounding interest. How does it work? Use a calculator. Go and learn. You're all very smart people. I'm sure you can figure it out. So that's the only single advice I would say.
Thanks, Jacqueline.
Oh yeah, and the podcast in the CPF podcast.
Thank you. Last but not the least, Joanne, would love to hear your thoughts. What should our audience do differently today?
Yeah, well, I would just reiterate everything my 2 colleagues have said. I want to say again, a man is not a plan, right? And for many of us in Singapore, at the end of the day, we know that independence is really the end goal is financial independence and well-being. It's not about becoming the richest or winning a tournament or getting an A+. It's about your financial well-being. You might not make the same choices that anyone else makes. So focus on your goals. I think today what you can do in very practical terms is review your financial situation. Absolutely. You can sit down today. That doesn't cost you anything, to have a good hard look at where you are, and to start having those conversations. If you have a partner, right, or if you have parents even who have been taking care of it, to just start those conversations today, open it up, and not to be afraid. I think to acknowledge what you have to do is lean into the discomfort. It is uncomfortable, it is scary, We all feel it, every single one of us, whether it's Dawn, who's been doing this for ages, whether it's Jacqueline, who is literally, ladies and gentlemen, at the top of the Financial Women Association, whether it's me, the quintessential absent-minded professor with a business, we have all been there. We have all felt that fear. It's okay. Just take a look.
And with that, we come to the end of our panel. Thank you so much, all three of you, for sharing your very honest reflections about being women in Singapore and sharing very much your own struggles with financial literacy. Hopefully, this gives our audience some real thought starters and things that they could do differently. Let me not say tomorrow, but starting today. Back to you, Kyle.
My. Every woman can definitely be her own CFO. And ladies, can I just say, I learned so much from this session. I've got credit to give to each and every one of you. Aashna, amazing moderation, great way segueing every single person. Dawn, a lot of knowledge that I learned from you. And you know what? I'm guilty of not checking you out yet. I'm going to go and learn and check out everything that you have. Jacqueline, my goodness, you are so relatable. You are the most relatable speaker I have come across in my 15 years of doing this. Everything you say is like a nail, it just makes sense. It just makes so much sense. And I understand that so well. Joanne, I am not a plan. But you know what? That makes so much sense as well. Yeah. You know what? At the end of the day, where I am, what I'm receiving from this is sometimes you just need to think of yourself as an individual. Yes, you might be married. Yes, you might have a partner, but it's your life and it's your finances. It's your knowledge as well. And it's almost like if you want to be in a relationship, then it's about having two stilts. You can't walk on one stilt. It's odd. It just doesn't make sense. So if you're in a relationship, then it's a two-pronged approach. It's about that unity and that inclusivity that you have between the two of you. But then again, you are your own person, so you've got to take care of yourselves. And wow, I need a moment. I need like a coffee to soak all these in.